Okay, thank you for clicking on our video and checking us out. I'm Tim Whitmire. I'm with First Integrity Mortgage, and today Michelle Kahn is joining us. She is an in-house DE underwriter, and we're here today to discuss the do's and don'ts of credit prior to and during the loan process. First and foremost, please contact me with any questions you have about your credit. So when we're working with credit, the most important thing is making your payments on time.
You're right. It seems simple, but making your payments on time is very important to your overall credit performance and your credit score. Making one payment 30 days late can negatively impact that score.
And credit scores are very, very important. Another common pitfall that I see a lot of buyers make when they're trying to prepare to buy a home is consolidating their debt. That could be a very good thing financially if they actually put you in a negative position when you're trying to buy a house, when you're trying to get the best possible credit score.
And that happens by when you close your existing trade lines that have credit history built up already, you're closing those and those become ineffective with your score. Also, you're opening a brand new account which establishes a new credit inquiry which reduces your score. Also, a new credit account that does not have a history built on it at this time. And then also, when you're consolidating, most times your credit line, your available credit line that they give you is slightly less than or slightly more than what your balance is at the time when you consolidate. So anytime you have your credit balance over 50% of your available credit, it's negatively impacting your score.
You're right, Michelle, thank you. And then also, how should they deal with judgments and collection accounts?
Judgments and collection accounts are dealt with in a different manner. Judgments are filed with the courthouse and require a satisfaction of judgment in order to rectify that on your credit report. Those do have to be completed and the satisfaction of judgment received and recorded in order to move forward on purchasing your home. When it comes to collections, whether they be medical or other, those are dealt with on a case-by-case.
And it's also important to not only consider your credit prior to applying for a loan, but it's very important to manage your credit during the loan process. There are 3 important bullet points I want to touch on. 1, I'm going to run your credit immediately when you apply, and it's very important to review the credit for accuracy. 2, it's important to continue to pay on time. And 3, do not open new credit during the loan process.
Right, because your file is being processed and presented to the underwriter based on your existing debts, and your debt to income ratio is evaluated at that time. If you open new credit during the process, then we kind of have to go back to the beginning and add that debt to your debt to income ratios and reevaluate as an underwriting decision, which can in turn affect your closing and delay it. I suggest if you have any questions, you should contact him.
Thank you, Michelle. As always, if you have any questions, please call me, Tim Whitmire. I would love to hear from you.